Okay, hi there, guys. Hope you can hear me loud and clear. Just let me know if I am coming through clearly, and then we'll jump into it. And also, just let me know if it's coming through okay, if it's buffering. Seems to be a bit low, the output today for some reason. I'm pretty sure I paid my bill, so just checking that. Good old Optus. Hopefully, they're digging up the footpath around here. Hopefully, that's the NBN coming. They said it was somewhere in a few months, which was about 3 months ago. G'day, Helen. How are you? All right, we're good. Good to go. All right, welcome guys. Welcome to Trade Setup. Live stream up and running for the 28th and near the end of the financial year. Market's looking a little bit stretched at the moment, but we'll see how we go. For anyone that's new, join us on the top left-hand corner. You'll see us at Twitter. Top right, you can join us on Facebook, but there's nothing special happening there. And down below, right-hand corner, subscribe to us at YouTube. I don't know what you call that. It's your handle at Trade Setup, capital AU. And we're going to have general advice warning smack in the middle for you to read. So, all right, who else have we got in today? So, who else has raised their hands if you're having a good day? I'll minimize that actually. I'll get that up and running. So, we're up 16.5 at the moment. So, ticking along okay. Ticking along okay today. I thought we'd open down, which we did about 10, 11 points. We didn't hold that for very long. Market, so you can see that, well, I'll just click that on, thicken that up. You can see the intraday action. So that's on a 1 minute chart. So it did open down, press down, just probably clean out a few people. Obviously, and we all know when you see the US down, I mean, I hate to say that, but your retail traders are going to run for cover. Everyone, all your alarmists, all your bears, be running for cover at the start, talking the market down. There's a good opportunity for them to get squeezed out, which is what looks like it's happened on the open, and it's just pumped back up, grinded back up to where we are at the moment, up 15 or so. Look at the 30-minute chart on the ASX. So that's actually not looking too bad from a technical perspective. It's getting a bit stretched up here, but that could easily spike and go through those highs. Again, we'll just have to, at the end of the day, if you couple that up with the daily, yeah, the daily could actually just do what we've done in the past. It's hovering around overextended, but it still went up for another 100 points or so. So this could easily blow up through 62.50. If it still gets a bit of a run on, we'll just have to see what happens in a couple of days in the new financial year. Especially if there has been a bit of a tax loss. Is it tax loss write-off? Yeah, I think that's what you call it. But anyway, coming into the end of this year. All right, let's chat about what happened overnight. So it was, I don't know if anyone saw it, our market. It's so what we do, we closed off not too bad. Well, the SPY at 4:30, and then you saw the open at quarter past, was it quarter past 5 or 10 past 5? The SPY gap down on the open. You got Europe that got thumped on the open. You go look back on a chart. I was actually trading it, which we'll talk about in a minute. I just want to talk about today about squeezes and when people can get set up for a squeeze. Everyone's loaded up one way, and the market can easily squeeze and really kick on hard the opposite direction as they all get squeezed back out of the market, whether they're locking in profits, locking in a small loss, or locking in a big loss. But it tends to happen quite a bit, and you can see the market, it sets up time and time again like that. And I've got 3 different examples we'll look at. One's a stock, one's a currency, and one's an index on the DAX. Yeah, I thought I was playing around with that last night on the DAX on the looking for a squeeze. It's pretty tough to do. Sometimes it can be pretty. It doesn't usually work out. I've been cleaned up just as many times as I've been profitable on that type of move, but sometimes it can really pay off well. Now, yeah, in saying all that, yeah, the market opened down quite a bit in Europe, smashed on the open, and I don't think it was on the back of too much. It seems that maybe it was just because the US there's a lot of people out, and then it turned about and bounced. I think it bounced, and the DAX gone from down, it might have been down 100 or so. I think, don't quote me on that. It's turned around and been up quite a bit on the close, but then what happened? The US bounced, so they were down. Also, the Dow was down at that stage around 5 o'clock, 5 or 6 o'clock. It was down quite a bit, getting hammered a bit on the futures. Turned around and bounced quite hard, just as hard, right up in the positive territory, and then pretty much come all the way back down to where they were, just above where they were around 5, 6 o'clock. So it was a bit of a topsy-turvy session, and the Europe missed out a lot on that. So tonight I would expect them to be down a bit. on the index anyway. The futures probably made up for it a bit. But yeah, I think Europe might be beaten around a bit today or tonight on the close. We'll see. So yeah, the news out, it was Trump come out and said something. It wasn't too bad, and they were taking it as okay, getting a bit more lenient on China with regards to tariffs and their stealing of, what was it, tech ideas and things like that. But then, so the market took that quite positive. You can see that it obviously reacted down, turned around and spiked back up again. Okay, Gino, how are you, mate? Ali, yeah, so it's spiked up. Sorry, what was I saying? So on that news, it was taken a bit negative, so it pushed down, and then everyone sort of, no, even though Trump has said that, we're still not going to be lenient on China. And of course, that's just the market's turned around and sold off again. So it's very news driven at the moment. The market's getting choppy, and it would have been hard trading last night if you were trading intraday because it was just news driven. So you could be looking great for one stage, and it turns around and stop you back out and just turns around and retraces on you fully. So interesting night. It was topsy turvy, pretty choppy price action, and you'll see that if you go and look at an intraday chart on the SPY, gap down on the open of the night session, below where it closed at 4:30, pushed down a bit, and then turn around and bounce straight back up again, and then into the close of the US session, straight back down again. So all in all, from start to finish, we'll probably open. That's why I thought we'd open down about 10 points on the index because it's sort of it was just choppy. But it was interesting to see all that. So yeah, I thought we'll go through the charts again. We're pushing higher. That's not looking too bad. There's not much to sort of say. You can see a couple of rejection candles just in here a couple of days ago. It did sell off quite hard and then rebound into the close on the XJO. And then yesterday it wasn't too bad. It was sort of got rejected from a move up. So we'll see how we end today, whether we push up or we just chop around here. And then it takes a couple of days to settle. And then if the US takes off again, if they have a couple of good nights, if we can press on through that 62.50. Otherwise, we might just hold a minor lower high and then press down and have that secondary reaction lower. Push lower, bit of a bounce, lower high, and then another press lower. It's all in context of the anchor way down here at around that 6,059.75. So that's your daily on the XJO. It's still looking quite nice in the weekly, probably getting a bit ahead of itself. It's probably due for a bit of heat to come out. See how it goes. Can hold the high low and then go again. We'll just see how that goes. We'll look at the Dow. Yeah, they're pressing down. That's not looking too flash as it has. So it's taken out this high low. So we'll see how that one goes. The S&P, and don't forget the Dow in the top 30 stocks. There's quite a few in there that are very sensitive to trade tariffs and trade talk. So that could be why that's overshooting the mark a bit. But the S&P, I mean, that S&P is still holding the trend. That's the anchor down here at 26.25. We're approaching that. So whether we retest that, hold up here, yet to be seen just yet. It's getting extended down here, so it's not a bad sign. Heavy selling, but it's still holding up above that anchor. So that trend technically is still on the way up. It's just the way this has come down is not too impressive, to be honest. So we'll keep an eye on those. Now we've got the FTSE. Not a bad night last night, but like I said, that it missed out on that move down during the US session. The indexes were actually closed by then. The DAX has been pounded a bit. You can see that move there. That was last night. You can't see. I can't get the intraday action. Get rid of those. But you can see that it's open, boom, straight down, and then rebounded quite well, up 114. So what is it? One stage it was down low 12,124. So that's over 200 points. So it was down, what, about 120 or so at one stage, then bounced to finish up 114. So the DAX is a bloody rocket sometimes. It's good fun to intraday trade, but it can really pay off. Because when you get it right, you don't get a chance to get out. You can just ride it, but also can chop you around a bit. All right, so that's the indices. That potentially just looks like it's rolling over. That's a Nikkei. We just have to see if that cops a bit more pressure. It is getting overextended down here, so it could find some support around that 22,000. And the one thing to notice, you can see this move up, touched on resistance, a good push down, and a couple of good days. So that's a couple of solid days of buying. So that's that action where you see if it's more, what were we saying? I'll draw it up. When you get a couple of legs on the move down rather than just capitulate. So that's what I'm always happy to see. Rather than if the move's pushed up like that and see this kind of reaction down. especially when it's above the anchor. That kind of move down where it's a bit more controlled, that's ideal, rather than seeing something that's moved up and just goes boom, straight, whether it breaks the anchor or it's straight down to the anchor in sort of one foul swoop. That's not a positive sign, and then you might get something like that, and that's more negative in contrast to that than seeing it prior when it's working its way back down slowly. So if that's the case on the Nikkei, it's just sort of grinding down. We could hold up when the selling pressure's been pretty good, hold up above 22 or even flush it out and then bounce. Just have to wait and see. Hang Seng's a bit of a different story there. It's looking fairly weak, but again, this could be all part of, this has had a massive move up with really no corrective action, no macro correction of any sort. Let's just see something. Just want to draw this up to see what that trend is on that. I think that was the weekly. So that's your trend up. So really, it could be just reversion to the mean. You see it got ahead of itself here, bang, straight back down. And then this chop was really just holding. And you can see it hold minor lower highs and you got that secondary move. So we have to see if that could sort of equal if it gets a bit further. But it's still, you know, it's all in context. We've got a little support zone here. It might bounce off that around 28. We'll just see if it can hold up about it. That would work into what we're seeing on the weekly. And a lot of times when you go near vertical, you're going to see, or you expect to see some heat coming out of the market there. All right, let's now what I want to talk about. I thought I'd just touch on, and it's only because I was trading it yesterday, and then I saw it again when I was looking at something today on a stock, and then I was talking to a mate of mine this morning about the Aussie, and it was a similar sort of scenario in each, which could trigger a trade, and we haven't seen it. So I thought, I know we talked about squeezes before, but it's probably, I mean, no, I know stock traders don't really think about it that much. I mean, you don't think about squeezing the market, this, that, and the other. But if you come from futures or FX trading, it's a common place to get for markets to, you know, set. I wouldn't say set the retail community up, but retail traders will trend trade, and then the market will turn and squeeze them back out and set it up a bit for a bit of a, you know, a squeeze play. And it's not a massive move. It's not really a trend move, or it could be the start of a trend, but generally they just squeeze them out. Everyone gets stopped out, and they could resume the trend down or the trend up. Um, but yeah, you can see it play out time and time again in the markets. And I thought, because we were talking about the Aussie, and I was trading the DAX, and we've got TAW as a stock that I was looking at today, um, which could just be setting up for a bit of a squeeze. Not your common or your typical squeeze play, but you can see it grinding lower. But we always talk about the anchors, and the market's holding above the anchor, so it could getting ready as everyone's getting short or getting out. It's still technically holding the trend and could be ready to fire again, but we'll see. So I thought it was worth talking about those today. Now let's start off with, I'll start off and see if I can show you what I was trading. I've got to find it on another chart. What I was trading last night. And it come close. So this is on the DAX. I just got to, is anyone trade the DAX by any chance? G'day, Mag. Yeah, not exactly a lot. You miss me jabbering on about stuff. That's about it. Um, so let's get rid of that. This is where how am I going to do this? This is what I was. Let's get rid of that. Oh, come on. I think this is the area I was trading last night. Now, it's not even going very well, am I? I just want to show you what's in context. So you can see that trend is obviously down. You've got a bit of a resistance up here. So we're looking at the half an hour chart as well. Market's pressing down. You've got a key level, well, not a majorly key level, but you can see the market's pretty much open. This is about, opens around 4 o'clock. So it's opened about 4 o'clock. Maybe that's what, not, actually that's not what I was looking at. Now let me get my bearings again, guys. Let's run the half an hour chart. Let's work backwards. Okay, maybe it was somewhere around here. I lie. Let's just take that back. I was trading around that zone. I'll have to get it on the, and you can see it was approaching a fairly good zone. The market's been pressing down. You can see, let's just get rid of that. Broke through support when it's had this big move down, consolidate back up, then it's tipped over. Now this is, when I show you the Aussie, this is a very, very similar setup. The market's pressed down. You can see that grinding action like we just mentioned before. You see that grinding action. That's very important to take note, because it's still negative, especially when you get the market doing something like this. You know that anyone that's been shorting it up here, and you're not, because you're up so much, you can afford to let it run a bit to see if it can grind up and then roll over, and continue and really take out the lows and continue on its way down. Of course, sooner or later you're going to have to reassess that, or you're going to have to tighten your stops up if you think this is not really going to go much lower. So that's why you tend to get this action. And anyone that's trying to pick the bottom, you can see this is near vertical. It's just bang straight down. If you're trying to pick the bottom off here, you're obviously very silly to try and buy it on these lows, because you can get another lower high and it can keep pressing down. So what you're ideally looking for is something potentially like this. You've got the low put in place, a little minor lower high here, pressed down, took out the recent low, popped back. You've got another lower high. It's pressed down, but it's fallen short, and you've got this higher low starting to build, and that's confirmed with a little pop up, if you can see that, through here. So what you're looking to do is buy when it pulls back. See if you can buy on it when it's starting to push back up again. But always realize that in context of this move down, because this is what you're looking for as a squeeze. Okay. So you could have played it back here, but it wasn't as clear as this move down. All right, and I'll just explain why. So you look, that's the kind of price action you're looking for. When it pops up, you build your high low, and then it's popping up, and you're just looking to buy off the higher lows, knowing that anyone who's been selling it on the way down here is sooner or later going to have to book profit and potentially get squeezed out of the market. So that's ideally what we're looking for, because if everyone's biased short, the bulk of people are short the market as it's heading down. Sooner or later, they're going to have to book profits and buy it back, and then you're trying to take advantage of a bit of a pop. Does that make sense, what we're just talking about there? And this market's starting to grind higher. Now, this is a bit tougher to trade, what we saw this time of price action in here, whereas for me, this one was a lot better. And this is because we got this half an hour chart, the market's pushed down. You got this grindy action. So if you are holding it from the highs, you're holding a short position. You may have taken some off the table, but you've got a core position that you're keeping short. When you see this, you're pretty happy, right up until you see it starting to stall, potentially at a major higher low. So instead of getting this minor type of high low in here and this minor grind up, you've got a major major high low building for a major pop up. Does that make sense? So it's the same type of price action, just in a bigger context on a bigger time frame. So if you are looking at this on a half an hour chart, and you can see the market capitulated on the open, took out a few, inside levels like we see just here, some of these inside levels, but it was well and truly extended. So at that stage, don't forget, it was down about 120 points, and for no real reason. It was just bang extended down on the open, and it would have flushed out a few people that would have bought it up here, looking for that squeeze play. But this would have been a really tough trade in my book. The market's popped down, squeezed these people back out, but then it's turned around and squeezed the longer term shorts out. Is this all making sense, guys, what we're trying to explain? So if I go down to what I was looking at here, it's probably on a 5 or 1 minute chart. Try to find it. I'll go down to the 1 minute chart. It was off the 1 minute price action. All right. So just remember all that kind of price action, what we're looking for. So this is the zone in here. So from the half an hour chart, this is a major, just remember this is a major high low that was building here. We've got the market pressing down, popping up, lower high, pressing down, popped up here. All right, and you can see at this stage, the market's still heading down. It's still confirming. This grind up was a bit of a heads up that, okay, potentially if we start to build a more major higher low, this could be a good little squeeze play, because you've got all these people that were originally short from, the original move back down. You move down on the 30-minute chart, and then you've got, this is a 30-minute higher low. So that's a bit of a heads up to the longer term players that, look, this holding it's not going to work out anymore. We're getting a major 30-minute higher low, along with a potential, this is a 5 and a 1 minute higher low. it was just a good little potential to see that squeeze up. And I think I got it somewhere in here off a 1 minute chart, for instance. I had to ride through this, I think. So I might have got it in here. I can't remember now. So I think we got a bit of a long in here. So you got this higher low starting to confirm. It's a very aggressive style of trading, but you can see that we got this pop up of, what was it, 20 up to about 30, and it just kept going. I think I got out somewhere around, so made about 20 points, 15 to 20 points on that spike. So I think I took 10 off here, and then the rest, the other half, with a spike up. So it was a good little trade. It was only more of a scalp, but just press down. You got that grindy action when you're getting buys, and then the sellers start to take control again, but then it just squeezes out. That's a major high low. So now you're looking for these sellers in here, potentially more sellers that are built up here to turn around and get squeezed out, because this is going to be, you're looking for that zone where it's potentially a major high low on the 30-minute chart, and you're drilling down to the smaller time frames just to see if there is going to be a squeeze out. Now, if this doesn't play out and it popped up and turn around and head straight back down, I'm not risking a hell of a lot on that trade. There are times when you could try it 2 or 3 times to get that squeeze. It works on the third time. So it can be not quite as profitable, but you can see there are times when if I was able to hold this, which I don't technically like doing overnight, holding it, you can see the amount of payoff that got all the way back up, and it really didn't look back. We're on the 5-minute chart there, just kept holding high lows all the way back up as it squeezed. So all this was part of a major squeeze up. That was from about 6 o'clock. So this played out, I think I was trading around 6, 7 o'clock. That played out just after 7. I think I got out, around 7:30, 7:45 when I closed out. And look what I missed. But so be it. I mean, you don't know that's going to happen. I'm happy taking 15 to 20 points, just trading the scalps. So does that make sense of what we saw on the in reference to squeeze? So that there's the squeeze we're talking about. So that's what we're looking for, not in context. That price action is sort of what you're looking for, but on a smaller time frame. So this type of price action, we got lower highs, high low building and pop up, another high low. That's the type of price action you're looking for, but off a major high low. So I hope that all this is making sense. Now, sorry, that was last night, Helen. So it was about Melbourne time, 6, 7, 8 p.m. last night. All right, so I'll go on to, so that was the DAX. Now, this type of price action, what we saw here, pretty much played out, I think, on the Aussie just this morning. I've got to get that up. What am I looking at here? The Aussie. Yeah, Mel, I tend to like the opens because I think you get more action in the open, as the markets tend to wash people out either side of the market. So you see overnight traders that might be trading CFDs, they tend to wash out major levels and then get into a bit of a zone as they've accumulated, they've cleaned out some shorts, short positions on a bit of a squeeze, and then pop back up, and then they tend to build, people, bigger traders. Sorry, what I'm trying to say is try to build positions on the open. You tend to get these little squeezes, and not on the open. They won't start trending on the open, or you'll tend to get a bit of action on the open, and then it starts picking a direction, and everything comes a bit clearer after an hour or two on the DAX anyway. And then you start settling in, and they start to wait till the US opens, or if there's any numbers later on about 9 o'clock, 7, 8, 9 in Europe. So that's sort of first. I think the market opens at 4 on the DAX and anything else. All right, so let's look at. I'm on the daily chart. Let's get into. It was on the 5-minute chart, I think. So this is the 5-minute chart on the Aussie. So it's pretty clear the market's pushing down. It's sort of consolidated through here, spiked up, and that again is just chipping people out, and it's built to the lower high and pressed down. So you've got this market actions pressing down. So right at this stage, this is where we were looking at it. I was looking at it this morning after, well, I'll get that back. I was looking at it about here, chatting to a mate of mine, and we're just talking about squeezes and that how it tends to happen, say on the Aussie, around that 10 o'clock mark when the ASX200 is open. You tend to get the Aussie can flush people out on one side of the market and then turn around and reverse. And what it tends to do is drag people in and then turn around and squeeze them back out again. So if you're looking at this type of price action here, it's pressed down, it's starting to grind high. So that's that type of price action we just mentioned before, where it's just, well, as these buyers start to build up, they're trying to get into the market, and then they turn around and squeeze back out. So you can see that that's that type of action growing up here. Then it started building some lower highs. This little spike here for me was the most important thing. That was right at 10 o'clock, or 10 past 10. We're on a 5-minute chart, so I think it was 5 past 10. So that was right when the ASX was open. You can see that opening. You can see that spike down, the Aussie spike down. So that was starting to play out as a 5-minute price action. People would have sold it. You can see, if I get rid of that, they would have sold it through. I'll get rid of that too. I'll do it this way. Sorry, guys. Actually, I'll do it this way. I'll get that screen snapshot. So what you've got here is potentially if I was looking at this, I mean, that's a nice little setup. You've got the markets pushed down, then you're starting to get this sort of choppy action coming up. And then about here, you started pressing down, and this was potentially a lower high. So all that was coming into play if you were looking at around 10. So there would have been some sell stop orders triggered just below there with that little spike lower. And then look at it, turn around and reversed all the way back up to that zone here. And I was actually going to buy it there, but I really just didn't have anything open. So I just sort of sat there watching it. So that there on a 5-minute chart, if you bought it on a spike through, knowing that potentially all these people that built up through here, short, if anyone that's hold it didn't get squeezed out, you've got a few of these sellers starting to come back in here. Maybe, I don't know if you'd really be building a position short from here, but any sellers that started getting in here, at least on this little spike lower. So you've got a whole bunch of sellers lined up to get squeezed out of the market, and then you've got this little pop-up. It set them up nicely, and then you've got the break through the high, enter with this move, looking for that move up here. Does that making sense there, guys? So you've got a major, if I can draw it in a different color, you've got a major pop up here, a press down, and then you've got the secondary move up. And that's that secondary move off a higher low. It can really, really put the pressure on, especially after you've had a big move down. If you flip this chart over, it's exact reverse. You've had a big move up, and you've got this secondary move to the downside, and you're looking to just take advantage of that squeeze of these people built up, these long positions built up through here. So I hope that makes sense there, guys, what we're talking about just on that one. Well, I thought it would be interesting, and I just saw a stock on Tor. I just wanted to show you this one as well. Actually, I've got that there. So I'm not saying this is a squeeze play, but it could potentially line up that way. And the only reason I say that is because for me, and the way I look at it, I'm seeing some nice little. So for me, you can see the market's popped up, pressed back, popped up. You've got a little bit of a pullback here. So for me, this was the anchor for this major leg up. That's the mining anchor there, and you can see pretty much. I think this is on a daily chart. Oh, that's on a weekly. Anyway, looking at the weekly here, you've got this market's pushed up, and this is really your anchor. Try to draw that up a bit clearer. So your anchor really is down here around that 32 to 32.5 zone through here. All right, so that's your anchor because you've had 1, 2, 3, 4, 5 weeks up, apart from that last week that opened, pressed up, and then finished on its lows. And then the market started heading south from here. But you can see it was getting a bit choppy. That was a bit of a washout here. Then it pressed down, started holding lower highs. And what we've done is come down and we've potentially found an inside support zone. So that would be beautiful. It hasn't played out just yet. And you can see that it's contracting lower, but it's all in context to holding above that key anchor level. And I think knowing your key anchor level is quite important because what that's doing there is really just putting a lot of people back on the sidelines. It could be putting, obviously, people that bought it late into that trend on this move up here, potentially putting them on the sidelines, or they're just happy to take the pressure, take the heat, and hold an open position that's underwater. Or you've got other people here that have seen this move up. They've been buying it through here. They've seen this spike up. Maybe they sat through this, and then they're starting to see this. They're cleaned out of the market potentially as well. So this type of price action is basically what it's doing is just cleaning people out, putting them back on the sidelines, ready to go again. And it's just squeezing in. But unless it breaks that anchor level, for me, the trend hasn't changed. And you can see it's probably quite clear that it's still holding. So you can see it's coming to a point of agreement now where we could get set if we're going to do it, start to hold a high low and really put the pressure on as we start to break out. And that gives you a little buying opportunity and then see if you can run it up through the highs at 57.5, even higher. So this is not technically a macro correction, but it is some serious corrective action, and it sort of plays well for a potential squeeze. It's not the same as the last two we just described, say on the Aussie and the DAX, but it is a very similar type of thing. Does that make sense? Any questions there, guys, or am I talking rubbish? Do you believe me? Um, yeah, and this, I think I was talking to someone, it might have been Mel the other day, and we're talking about psychology of the market. And this is where psychology comes into it. If you're holding it through here, for example, if you bought it, um, let's just say in this zone, if you bought it in that zone, or even let's take one step back with a breakout through here, you bought it with a breakout through here, you're underwater, you're only barely underwater, but you've come under some serious pressure. So if it starts breaking down through here, you're going to have to question that, aren't you? You're going to have to question, especially if it breaks through the support zone. But either way, if I was holding it there, I'd be questioning the emphasis of this trade, or the 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 meaning for this trade. Technically, if I bought it on that breakout, my stop would be below here as well. Anyway, it's just that it gets quite annoying when you get this, it's looking up for you, and then bang, straight back down again. So you go from being up to being straight back down, and then it gets grindy. The market's compressing in on itself. And that's where psychology comes into it. Whether you can hold it through that, and you understand your price action, and then you're looking for this again for continuation, or you might just have your stop. Say you might have moved your stop from, say, 30, for instance. You might have moved that up a few cents just to tighten it up, just to minimize that risk, and see if it doesn't pop up and starts heading south through, what's that, about 30, I think it's around 35. Look, you might just get out. You might just get out, have your stop from 34, moving up from 30, for instance. So all these sorts of things, it messes with your head. And that's, I mean, anyone that's traded for a while, even if you're new, you know these sorts of things are built and made. And this is the kind of action, and this is why the action builds, because it's messing with people's psychology. There's a whole lot of obviously technical reasons. You've got moving averages, all these sorts of things that people look at. Where when push comes to shove, I guess everyone has to admit that your mind starts playing a big factor, especially when you've got money on the line. And I think you see that quite a lot. And that's why you see these little spike ups and people buy it on the open. They don't want to miss out here because they're looking at this price action. Then bang, turns around, they get squeezed back out of the market. All these sorts of things, but it's all in context of this bigger move up. Especially when you're looking at, say, the Aussie and the DAX, what we talked about before. If you were short in that and then you start to see something holding higher lows, what are you going to be thinking? I mean, technically, the 30-minute chart might still look weak. There's no reason to get out on the 30-minute chart, but do you really want to give up too much profit if it's going to retrace on itself and you don't know where it's going to go? And that's why you get people who might have missed it when you get that secondary rollover. If I can get it back on the DAX, no, it's probably Aussie, wasn't it? When you get this secondary rollover, someone who's missed this move down that might have their biases all the way down, their long-term bias is down. They go, I don't want to miss out on that trade, and they take an entry short on a breakdown because they got this lower high in place. And then what it really is just a higher low in the overall context, and you get that secondary move up. So there's a lot of fear factors coming into play there. There's a lot of psychology coming into play there, and reasons why, especially if you saw this moving down and you're seeing this start to play out, and then you get this sort of washout here, and it's starting to retrace. You don't want to give up your profit, especially if you shorted up here, or if you shorted it, for instance, through here, you sat through that, and then you're sitting through this, and then at that stage, you can just imagine what you were thinking when you saw this. You're going, sat through all this heat after taking all this profit, being quite profitable in that trade. You sat through all this heat, started rolling over again, and then you sort of started, you're watching the market start to retrace on itself, going, hang on a second, this is getting, if this breaks up through here, what's going to happen? I mean, this trend, this longer term trend's not over. It's just a bit of a retracement, but do I actually know whether that's just a retracement or the start of a new trend up? Look at what happened on the DAX. The DAX went bang, straight back up again. So all these sorts of things are going to play on your mind, and people, there's probably more so on your currencies and your indices and your futures that they'll cut it out and reassess the situation. It's a lot quicker, the action. But yeah, psychology definitely plays a big part on the way people trade. I mean, you can have a plan for your trade, but when you're sitting in profit and you're seeing it evaporate, you might change that plan, and you do the same thing when you're in a loss as well. We've all done it. I've done it numerous times. Of course, it gets through that, and then you just get cleaned up, and it's a much bigger stop than it should have been. So all these sorts of things come into play when you're, well, from a psychology perspective, when you're trading. All right, so I banged on quite a bit there, guys. Any questions? Just something we'll talk about. John, TAW merger with Alliance announced in April. Yeah, so that was way back here. It's still finding a bit of pressure there, isn't it? So any questions, guys? Put in some trades now if you like. Just chuck in something into the chat, and we'll have a bit of a talk about it. I'll just go through and check out what's happening. We're up 12. We haven't moved too much. All right. See where we're at on everything. We've got one TCL which come out with that was their ex-div today. They went ex-div today, and probably when you take into account the divs, we got in at 12.20, I think it was. At the moment, we're better off than where we were yesterday, so we'll see if that one kicks along nicely. The rest of them we got, WHC, that's actually starting to pick up a bit. Look at that chart. It's holding above our stop, and you can see that minor contraction there, some minor higher lows, some lower highs. It's squeezing in. So generally when the longer term bias is up and you've got the stochastics coming down, so that selling pressure is pushing down, but it's holding up, as in there's still buyers stepping in at higher levels. I'd be biased. So I was looking for an entry on this one. I haven't. If I hadn't entered by now, I'll be looking potentially biased for a push up through 75. Yeah, 575, and see if you can run the highs into 590 to $6, even if you're looking for a short term trade. But that definitely looks bullish to me. So we'll see how that one goes. ATS is starting to build as well. We're probably getting a couple of days. If we can end in the green today, up today, that could be looking quite nice. We got that at 41, so we're looking great. Took a lot of pressure here. Down a couple of days ago, and we just bounced back a bit today, but generally that trend is up. That's looking great. FBR, SAS, and THC, we'll look at those in just a tick. So that's ours, pretty much. They're all ticking away nicely. CAJ, I want to see that after that little pop-up. It's mainly the weekly that we're looking at here. I mean, that weekly looked like rolling over, but look at the daily, going from overbought to oversold. We'll see if that can hold up here and then spike again through 34. Give us a chance to take something off the table on that one. That's it. New one today. Might as well talk about it. NCZ through 137. It's pretty much right there now. Looking for that to continue on, and that's mainly got to do with that weekly action. Good push up, and what we've seen, a lot of people flushed out, but it's holding it. And the good thing about this is holding at higher levels. And then we've had this little pop up here, so a couple of green weeks followed by a red week, a red candle on the weekly, and that is this price action. And again, that's holding highs, and we're starting to see some higher lows coming in. So I'm expecting this to push up to potentially up to 160, and see if we can push through the highs. See if we can push through these highs at 160. If not, it just gets up to 160, for instance. But we'll book some profits up there. We'll see how we go. So that's it from us. Let's look at Tor. I'm going to keep an eye on Tor. And one thing I do like too, I take more context of it. You can see what we're seeing here is a higher low. I mean, you could argue that, okay, the market's down, you've got a higher low. It doesn't mean anything because it's still holding some major lower highs. But the thing is, we've got this double bottom on TAW, which if it happened, I'm trying to find a good example, not really in here or in here. It hasn't really held a high low previously. So this could be the start of we're starting to pop up. Even if we just come, but I'm always putting a lot more emphasis in when you've got these double bottoms, or we call them retest fails. So this is a push down. You've got this spike down to what was about low of 36.5, low of 35.5. So it's popped down to that low, pretty much retested that low. We call it retest fail, or you can call it double bottom, whatever you want to call it. Market's pressed down. It's popped up. It's built a higher low in here at 38. It's not a major higher low, so this could easily just pop up to say 44 and then roll over and take out that. You don't know, so it's not a good area to buy off, but it's a good bit of a heads up, especially off that double bottom, a bit of a heads up that maybe we're starting to show some price action that could be more bullish than what we see negative, especially when you got it in context at holding the major anchor above 32.5. All right, let's get into FBR. We have looked at this in the past, I think. I don't mind this at all. It's, for me, I have been watching this, and it's mainly because of the weekly. So obviously on the weekly, you've got this spike up. It had a pullback, built a higher low, and it's doing maybe this kind of action again. And by that, I guess it's pretty clear what I'm talking about here. It's sort of repeating the same type of price action as what we saw previously. So what we saw is a spike up, a pullback, build a lower high, but that's more of a squeeze. High, low in here, we're getting this. So if we're doing the same sort of thing, 1, 2, 3, if we're doing that, from here we'd expect a good spike higher. We're getting this potential, this type of price action. It's probably, it might take a couple of more days to play out, but if that's what's going to play out what we saw in the past, this could lead to at least a spike up to 30 cents or even beyond. But we'll wait and see on FBR. But I've got this one, just keeping an eye on that one because it's mainly from the daily. I don't think maybe the weekly enough heat has come out. Well, look, it actually has. You can see that move up there from at least 10 to 30. It's a 20-cent move. Come back to about 15. So it's a kind of a deep correction or reaction lower. Probably a bit more than this one was, roughly 50%. This move back before it started holding this high low and took off. This one was a bit deeper, this move back here. So that's probably the only real thing. And that the deeper the correction, the less sort of strength you can allocate, or the less probability that it's a really strong market, if it's making sense to everyone. So when you get something and that's why I would say if it does break through, say 20, and you bought it, rather than look, just hold it for a breakthrough, that would be an initial target for me up there, up towards that 30, because of the deepness of that correction as opposed to what we saw previously. But if we go into the daily, I'll get that up now. I've just got my eye on, you can see that sort of move through here. You can see it sort of correcting down, and then we popped up. So this for me, that's your pop up out of correction, out of contraction. And I was initially looking at it here to start chopping around in here and holding like that, and then potentially breaking up and getting it on a nice little inside level. But instead, we've just sort of, the market's pressed down a lower high, and that's led to a bit of a wash out of this low. But you can see it wasn't that far. It didn't get too far. So that's still, the context is quite good because it's all in context. This little pop up here. Maybe the market's not ready. Maybe there's something we don't know that's coming out. So that's why you don't want to just jump in. You want to jump in when it's on the rise. So if something does happen, it could be a capital raising where it's hovering around here as a capital raising, or a corporate action at 15 cents, and then all of a sudden you're bought in at 18 and boom, straight down to 15. Pretty much guarantee that would happen. But if you get in here and it starts to break up and say potentially bought it up through 20, you know that there you've got this major correction lower. We're starting to come out of that contractive type of price action, or that pullback. You've popped up. We've sort of just done this minor contraction or correction lower, and you're starting to build a major higher low in here, as opposed to 15, a major higher low at 17, and we're starting to come out of that. So you're looking for the market to 1, 2, and you're on the rise like that, and just see if it can attack back up towards 30. But we'll see. I blow out through 20. If you get in at 20, or you might get in through a push through the highs at 21.5, might just pop up and then roll over again. I don't like things spending too much time when it should be clear price action. What was the other one? SAS. Hating this one. I've actually got this, and this has been look great up here, and they're doing some good things, but this action is really rubbish. And again, this could be just squeezing a lot of players out. When you look at the daily, it looks like rubbish. The weekly, look, I've got some on this one. We've had it popped up, probably a bit too aggressive, and I've held it through the squeeze, and that's probably purely because on the weekly you've got the anchors way back here, and we're sort of getting right into that zone now. So you've got this leg up, pull back, and you've got this spike up here. So that on the weekly, bang, straight up, and it's a bit like tall. We're contracting back down again. and we've pretty much come all the way back down. We're potentially going to retest that zone. We're well and truly in oversold territory, so the selling pressure's been quite, and you can see that sort of pop back down here, lower high, come back in, washed out that high, back down again, just kept the pressure on, and we've come all the way back down. So when you draw it up like that, you can see that that pressure's been quite constant. And they've had a couple of decent announcements, or half decent announcements, I would have thought. It's just, for some reason, the market doesn't seem to want to react to it. So I think if you're looking to get in it, it has to hold up off that level, potentially pop up through 12. And again, it's come down, pop up through 12, and then start to build again. Start to get a bit of a run on, take out that most recent minor lower high for this leg down. And then, obviously, if you bought it, say you did buy it through 12 and you put a stop around 7, you just want to be concerned that it's still in that major correction until it gets, probably right up through 20 or so. So you can get caught sometimes when, say it pops up here and then it basically stops dead in its tracks at around 16 and just rolls over again and continues that longer term correction. All right. All right. So that's SAS. Yeah, it's a bit of a bummer, but we'll see how that one goes. What was the other one? THC. Look, that one, hydroponics company, it's very small by the looks of it. What kind of volume? I mean, you can get a bit out if you wanted to. You could. I mean, look at 53. There's only 5,000, but at 53 and a half, there's nearly 30,000 shares. So what would that be? About 15 to 20 grand's worth. So you can. Well, after that, there's not a hell of a lot, and the bids look like they're stacking up. So you can see that there's a bit of volume there. Um, this one, it comes down to just what we've been talking about. That very similar type of price action. Anyone who's bought it, you've had this not low, this level through 20, chopped around. What did it do before that? Let's just go back to the weekly. Not much. It looks like it's open somewhere around maybe 20, 30. It was a couple of raisins on the IPO. So IPO, IPO'd around whatever it was, maybe 20, and it's pushed down to 20 again, and then that's where it started to take off. Good part of 6 months or so, 5 or 6 months before it started kicking off. So if you hold it through the IPO and you're just holding it for 6 months, great. And then you probably find that a lot of the people in IPOs, or even you get seed before that, might be at 10 cents. Say that the seed capital was at 10, IPO floated at 20, you got that initial pop up. You probably find that that's the seed starting to eat its way out. Um, just looking to take an opportunity. They doubled their money essentially. They don't know what's going to happen, so a lot of people will do that, buy in it's a seed and just get out, take the double their money, 100% gain. That's pretty handy. Book the profit and move on. But if they know something good's coming out, they may just sit there and hold it. And the IPO people, you might have taken a few that just popped up to 30 cents or 40 cents. They've essentially doubled their money as well. If it's at 20, this is all high speculation. Or they're sitting on a bit of gains. You're always going to get those initial profit taking jump in. If you've got something at seed capital or you've got something as an IPO price, you bought into the IPO and it pops up, you're going to get always going to get people who are going to take a quick profit and run. And then you've got your longer term investors and they've sat through this, then you've probably got this spike, then your longer term investors have potentially got out and called it a day there. But either way, what I was talking about now, without getting sidetracked, we've got this little pop down here and it started building the base. So you've got this little spike up here. So if you were looking at that stage, and that's a spike up through 30, most recent, as it's starting to grind lower, it's got that spike up. So it's news driven potentially. And you've got this pullback, build a higher low. So if you bought that through off that higher low through 35, I think it is roughly 35, 36, 37, you would have been laughing within the first few days, probably that you bought it on that red candle, probably wasn't too good then, but then the next day, boom, 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 all the way up, and drove all the way up to 90 cents. So you pretty much tripled your money, close to, if you could hold it, even if you could hold it right up here, you tripled your money. Probably a bit tough because really the first sign of exit you might have just spiked up here, and that sort of rejection candle, that massive rejection candle, and then you got this lower high a couple of days, you might have sold it on a breakthrough there, sold it on a gap close, or you might have held some all the way back here, you might have sold some when it pushed back through that higher low, essentially all the way back down here. because you had a lot of profit to play with either way. What we've seen since, you've had this market pressed up, pulled back, had a good correction, washed out a lot of these traders from this move up, pushed back up, built a major lower high. So you're just taking it along there, and then it spent a lot of time. That's your secondary move down. So you essentially had, if I can clean this up, you essentially had 1, 2, 3 moves down. So if that's your two sort of a corrective action, it's taken out. It's still holding above, this zone through 30 to 35. Still holding through above that. We've had this. That's a good little pop up, but we have to now, and just look at it too. You've got one, sort of two moves down, the same as this. You've got that sort of secondary move down. So potentially we're going to hold a higher low at 50 as compared to say 45. So this could be something to keep on the radar for a bit of a pop up. But we'll see how it goes. I mean, if that's going to build a higher low, I'd essentially want to see it do a bit more action, a bit more of a squeeze. Just drag it in some buys, get that more of a squeeze just at this point, with some minor lower highs and higher lows. And then you obviously, what that does, what we always say, when it squeezes in, you get that point of agreement where you can minimize your risk for a potential good payout towards at least 80 cents, to the previous high, or even 85, or you're going to be gunning for that, open it up a bit and let it trade up to 110. Excuse me. They always come in threes with me. So does that make sense there, guys, what we're just looking at? So the reason it's all this price action is you've had this essentially one big move up and a lot of heat come out of the market. So if you've held it from that IPO and you saw this and I'm going to hold it, this is going to $1. Well, I'm sorry, $2, $3. And you saw this and then you held it through all this heat. It's coming. You've given up all these potential paper gains for nothing. So you'd be probably with a push through here. There might be some more squeezing out, or you get some secondary buying start to come in. You hold a high low, and then it could go on with it. Look, we'll have to see how that goes. But personally, I think it's got a lot for me to get involved in this one. Was at THC, a fair bit more work to do. I like to see a bit clearer. I'd like to see it. Just take all this off. This would be my level. I'd want to see it push up through here and then pull back and build, push up through that resistance. That was a horrible bit of a drawing there. That's your move down, so I want to see it push up through here. It may be correct, but in context of this low, I want to see it hold up and see if we can get a bit of minor contraction and then pop up and go from there. So I still want it. I would like to see it prove itself a bit more. All right. So I think I hope that helps, guys. I hope you enjoyed that. If not, we'll see. Any questions there, guys, just before we probably wrap it up? I think we've gone through everything, haven't we? If no, we'll probably call it a day there. It's getting on about an hour now. So if you have any questions, if there's something that, when you're looking back over it or you want to ask a question, just email me through. We can see if we can go through it. Otherwise, I hope you enjoyed it, and I hope you all have a good weekend. And then we'll speak again on Monday at 12:30. All right. See you later, guys. See you, Gino. See you, Helen. See you all later. See you, John. Cheers, guys. Bye.